like, I mean, this is a this is a big beef of mine in general. Like the whole, I think there is a lot of value to Discord servers and sort of this alert culture that we have in FinTwit, but there's an inherent flaw to that system, right? When someone sends out a Discord alert or a Twitter alert, right? They're sending that out after they enter the trade, right? They're sending it out after their execution. So if you're chasing that play, if you're say 30 seconds behind, say you're 15 seconds behind, one, you're not understanding, like you're not learning why that person was interested in that play, like what their confirmation was, what they saw that really pushed them. And then your risk reward is skewed, right? Because all of a sudden you're 30 seconds behind, and that can be 30 cents, that can be $1, that can be whatever in a security. And all of a sudden the numbers no longer sort of stack up for you. So it's all about, it's not that Discord servers can't work. It's all about adjusting that sort of framework or sort of that mindset around how you trade them to sort of incorporate them as sort of as a setup signal, right? Not as the only reason to sort of enter a trade. Yeah. So for me, the way I like to teach traders, sort of the way I was taught, is that you need to have a plan for every single trade, right? Oftentimes I find my losing trades or my biggest losers are the ones that I'm revenge trading, right? There's like a nasty thing in trading where the more you lose, the more setups you start to see, right? And so generally when I start to see more setups, I know that I'm kind of like going on tilt, right? Or I'm getting close to starting to make bad decisions. And so if you can catch yourself from these little mistakes, right, that's how you protect your account from blowing up, right? So risk management is a proactive, not reactive situation. And it's about creating yourself a framework to be able to dominate so you don't have any risk management failures, right? So in my opinion, like I really dislike when people say stuff like the market is really hard or the market is really challenging or, whatever, because we know this, right? We know the market's not going to go up in a straight line. What we should be saying instead, or what we should be phrasing instead, is that our framework on how we can address this market, right, is flawed, or we don't have a good way of being able to consistently approach this market and be able to make money. So it's all about finding that consistency in your approach, right? Like making things as solid and repeatable as possible. Because then when you go back and you look at things, you can see the patterns of where you failed. You can see the patterns of where you maybe need to make that little tweak and improve. And so that's what I want to try to teach the members, right? Is that sort of mindset and that sort of thought process of thinking in the setup, confirmation, execution, like kind of blueprint method. And hopefully that gets people to always kind of think through their trades, right? To sort of have a plan for every trade and to catch their breath, right, before they do enter one. Because that's another big thing, right? You get that first signal and, oh my gosh, I'm going to miss the move if I don't get it. And you get faked out or you get stopped out, right? So for me, that is really the framework that I think all traders should focus on. And I really think it translates a lot to any sort of strategy, right? There's 3 parts to it. And if you listen to sort of previous episodes, like there's a lot of the sort of strat in there, or like sort of strat influence, right? And then sort of a lot of that like singles and doubles influence, right? So if you are able to combine those 2 ideas, right, where it's enter on strength and not be greedy when you find that strength, as long as you keep your risk reward reasonable and you manage your risk appropriately, you just turn trading into a very simple, repeatable numbers game, right? So hopefully over this podcast, I can teach you guys that framework, right? And we'll go over that here in a second, but that's really the main objective of it, is to get people there. So part 1 is setup, right? It's the core concept is, why do you want to take this trade? Why it's interesting? And for me, that can be anything, right? I'm personally a support and resistance trader. So I'm looking for basically high and low, like daily high and low breakouts or daily high and low breakdowns, right? But it can be MACD cross, it could be RSI, it can be Elon Musk tweeting that him and his ex-wife are back together. Like it really doesn't matter, right? All that it is when you're a retail trader is that you are expecting a reaction at your setup, right? So when you get an idea or when you see something happening, right, your technical analysis or your plan beforehand, all it's telling you is that when this happens, I'm expecting a reaction, not that I'm looking to get in. So if you get a MACD cross, if you get a high of day breakout, the reaction that you're expecting to see is, a big volume bar coming in, right, and a lot of strength coming in. So that is your confirmation, right? So if you get your setup, right, you get that cross, you get that breakout, You wait for that sign of strength on your confirmation, right? Then you apply your execution rules to sort of make that numbers game work. So it's a very simple kind of 3-part process, but it really helps people to just break down, catch their breath, and then hopefully be able to like slow down and find their winning plays.